One thing that we've been talking about for a while leading up to this meeting was some of the macro sort of structural changes impacting the various property types that we look at. And it was really interesting and heartening to see a lot of intellectual time and energy spent at this meeting, not only on the detailed fundamentals of the office market, the industrial market, the retail market, the multifamily sector, the hotel sector, but also on some of these macro structural changes that we think are really going to help shape and form demand going forward. As a few examples, the trend in the office market toward higher density, more efficient space, more collaborative space, with not only creative and innovative companies like technology and the knowledge sector driving that shift toward outside of sort of commodity Class A markets and into more funky, original, innovative space, but also the demographics and the millennial generation and technology really driving that. In the industrial market, it's the opening of the Panama Canal coming, which is shifting the weight potentially of logistics and distribution from the West Coast to the East Coast, and opens up opportunities in East Coast port markets, in addition to the high price of oil potentially really impacting supply chain and logistic decisions. And then in the retail sector, you're seeing the consumer pull back, and you're seeing certainly retailers become more creative, focus on infill locations and on much smaller concepts that really target the consumer of today that's really focused on convenience and on value. Some of these big structural shifts are important to look at alongside the typical market logistics of vacancy and rent and pricing. And we've seen good focus on that here at ULI from the investor community.